Good morning and welcome to Blain's Morning Porridge. It's March 30th, 2026. Stage 2 of American Divergence and the risk of global stagflation. And as always, let's start off with a quote. What scares you most? Events, dear boy, events. The global economy is inevitably slowing from the deepening Hormuz oil shock. The Americans intend to press on despite the rising costs. While the global economy burns, President Trump is mulling multiple plans to achieve his version of victory. The rest of the world is waking to the reality that this war is damaging their economic interests, and they're wondering how to mitigate the effects. It's another interesting week's play in prospect for the global financial markets. What will happen next? Nobody knows. But the financial markets are never simple. You can't simply define them in terms of the sentiment differential between optimists and pessimists, or how deep or shallow real events will go. There are consequences and effects which make markets and consequences kind of multi-dimensional, which is a little bit too sci-fi for a Monday morning, but I'm sure you get the drift. However, there is a new reality emerging, and it's political realization. Call it stage 2 of the Trump effect. Stage 1 was what we've seen since his second inauguration last year. It's the realization that Trump holds the rest of the world in contempt. Stage 2 is actively countering him. Around the globe, nations are now experiencing the negative consequences of Trump's misadventurism on their economics interests. While Trump continues to hurl insults at nations that won't support his war, there is a growing realization it's America's actions that have triggered a global slowdown and likely stagflation. Now, there was a time when the Western world would happily have followed America into the very mouth of hell, as we did in Iraq and Afghanistan, but that is no longer the case. To understand what follows next, let's start by trying to work out where we are and the unquantifiable ramifications of a pack of cards that's been dropped on the global economy. And if you're at all concerned at the cost of the war on the US deficit, over the weekend the USA lost a venerable E-3 Sentry battle space nerve center which was taken out by a missile while on the ground. Now, while Donald Trump may dismiss it as a very old plane, there is nothing that the Americans can replace it with. The replacement E-7 Wedgetail is massively delayed and over budget, and they are each expected to cost 700 million plus. Let's call it a 1 billion conservative estimate of the real replacement cost of that single old E3 that was hit at the weekend. Even more damaging in the losses that may stem from a lost resource to claim the battle space in the Gulf or elsewhere that it may be needed. To understand the consequences of the war, what is the real economic damage? And one of the best market commentaries that I subscribe to is James Eagle's Killer Charts, which illustrates the world in a clear and insightful way. I've stolen his headline chart this morning for the Morning Porridge written version, Ships Through the Straits of Hormuz. It's a graph that shows that basically transport has stopped, as we all know, and when 20% of global energy has literally been stopped for a month, there is bound to be consequential problems. As James says, it shows how global trade behaves under extreme stress. It does not bend, it disappears. Now, it's impossible to argue, as some in the US are doing, that stopping 20 million barrels of oil per day is something that the laws of economics can just shrug off and ignore. It's not just oil, it's every product that is derived from oil and Gulf gas, from jet fuel to fertilizers. For instance, did you fill up your car over the weekend? Nope, I didn't, and I wish I had. The £2 litre of diesel is just days away, and the supply chain consequences of higher diesel costs are enormous. James makes the observation that diesel is not just for powering your Range Rover. Diesel powers logistics, agriculture, industry, and infrastructure. Raised diesel prices and the cost of transport rockets, feeding straight into inflation. And this morning, the first headline that I spotted on Bloomberg said that bond markets are staging a rally on the rising expectations of a global recession. But I suspect that global stagflation, that's rising inflation and falling economic activity, is a far more likely outcome. And dealing with stagflation in the 1970s caused a lost decade across many economies despite their relative political stability. Compare and contrast that today to today's massively more polarized and dysfunctional politics, which are riven by fake news and populism. And it's a recipe for further instability. If we cannot address stagflation effectively, that will be a real economic problem. Another of James's charts this morning shows that less than 4% of Gulf oil production goes to Europe. It's Asia that's set to struggle most with a complete shutdown in oil supplies, and some nations are already preparing for rationing. Gas is Europe's main problem, and I'll come to that later, probably later this week. My fear here is my fear here is that someone may tell Donald Trump he's missing a trick here. China takes nearly 40% of Gulf oil, which we know is largely discounted as much of it is from Iran. What if Trump makes the connection and triggers an even deeper trade war, which past experience over rare earths reminds us he can't possibly win? As I noted earlier, some of my American chums don't believe higher oil prices are a problem because the USA is a net exporter of energy. Being Americans, they are thinking of themselves and how the US economy is largely isolated from the consequences of its actions. Echoing a great piece in the Wall Street Journal yesterday, 3 reasons the stock market can endure the war. The article pointed out that US company earnings predictions are still rising, and while some heavily oil-dependent sectors like airlines, chemicals, and cruise lines might struggle, the rest of the US is doing just dandy. The mood in the USA is in direct contrast to the increasing gloom elsewhere. In the USA, a short, sharp war is seen as fine, not a destabilizing catastrophe as is elsewhere. The article points out that despite the USA's disappointing away record in world-class wars against military giants like Vietnam, Afghanistan, and Iraq, and others, military misadventures don't seem to impact US stocks much since the 1930s, and the US markets are apparently immune to its many unwon wars since Korea. A recent Deutsche Bank report suggests that that's due to the US economy never having been bombed, invaded, well, not since we burnt down the White House in 1812, or utterly destroyed as most of Europe and Asia were in the 1940s. While European economies are generally concerned about the consequences of conflict with Russia, and the Gulf is now trying to work out what increased regional instability from an unconquered Iran might mean, and Asia is trying to work out the economic damage from oil price hikes, the Americans consider energy shocks is something that happens to other people. And while they react badly to unpleasantness, like a glut of returning body bags and higher petrol gas prices at the pump, as long as the stock market is booming and their 401ks are thriving, the rest of the world is increasingly looking on and wondering. Now, no one disagrees that Iran was a dangerous state that fermented regional trouble, but it looks politically awful for the global economy to tumble into a stagflationary recession while the US suffers little more than a minor inflationary hiccup from Trump's war. Will the headlines, higher gas prices, and global disruption be consequential enough to see Trump effectively hogtied by the coming midterm elections. Perhaps, and perhaps not. But back in the real world, Europe and Asia face mounting disruption, and how they start to respond and ameliorate the situation is what we should really be thinking about this week. I don't think that the global economy is nearly as solid and secure as we think it is. Anyway, I'm out of time and I gotta go and catch a train. So it's you can find the Morning Porridge on www.morningporridge.com, and if you sign up, you can get it delivered to your inbox every morning where this podcast will be attached. Anyway, gotta rush. Thanks very much. Back with something else completely different tomorrow.